office.
And what is the footprint that you have lined up for the company?
Well, I think retail is something that we are expanding, but very cautiously. The focus is on creating a profitable company and a profitable network. And I think after we've reached a certain scale that we have, profitability is the next big thing that we are looking to achieve.
The resource side, you have always been extremely active and your company has looked into assets all across the world. Does the strategy still remain, because you are very much a part of the bidding process for STEMCore as well?
STEMCore is something that we're looking at. It's on the drawing board as far as we're concerned.
What is the status of the CBI investigation which is going on? How confident and optimistic are you at this point?
Well, since the matter is sub judice, I don't think it's appropriate for me to comment on that at all.
At present, as we speak, do you think that the target of reaching by 2020 $65 billion mark for the group is very much achievable? Are you on track on that one?
The world has changed a lot since we set that target. So in terms of exchange rate, in terms of what's happened to the world economy, but we are sticking to that target, knowing full well that it's a really stretched target.
And how about investments for the short term from now? What is the kind of capital expenditure for the group that we have put in place?
We have in the last 3 years invested huge capital, be it in our metals business, cement, fiber, chemicals. And I think that this is the time to actually start to see cash flows come from those before we think of the next tranche of investment.
In the present economic environment, we have seen some of the good data coming out, like CAD coming down, rupee stabilizing a little. Do you believe that there are green shoots available now?
I think so. I think that both of these financial indicators are very significant, and they could well be, harbingers of change for the more positive. And with these two data points being the way they are, I think there's some reason for feeling optimistic.
All right, and as a group, Aditya Birla Group is looking at what few triggers which could bring about a change in the economy and bring back the growth momentum for the economy.
I think infrastructure is a big one, and speed of execution.
So that was an exclusive conversation with Mr. Kumar Mangalam Birla. But blink of an eye and check on TCS, 43 rupees up for TCS. Now the outlook for IT is not extremely rosy because rupee has appreciated or dollar has depreciated. But TCS, which has been a performing stock, has really gone up on some institutional buying. HCL Tech is also chipping in very smartly. So the good thing here is that yesterday infra and banks, they led the rally. Today IT also seems to be chipping in. So it's a rising tide and everything is contributing, and that's what you want to see. More participation, broader participation, and participation from some leadership sectors. And IT is also looking smart. But one stock which has done remarkably well after Q2 numbers is Raymond's. Raymond's came out with exceptionally strong Q2 set of numbers. Based on those Q2 set of numbers, what is the way forward for Raymond? Let's understand that with the CFO, Mr. M. Shiv Kumar. Mr. Kumar, good morning and thank you for joining us. This is Nikunj Dalmia from the Mumbai studio. I am just going to take a leaf from your Q2 numbers because your Q2 numbers were exceptionally strong. There was all-round growth. How is the business momentum looking for Raymond's for this quarter? Do you think your Q2 success will be replicated again?
Good morning. I would like to first summarize, what difficult times that everyone went through. India has gone through very difficult times in the last 1.5 years, which include, high current account deficit on account of volatile exchange rate, rising oil prices, and the recession in the overseas, mainly Europe and the US, and it compounded further by the domestic slowdown in interest rates and continued inflation. So we were impacted by rising input costs, namely the raw material, which is coal and utility costs, and the demand slowdown caused by the lower discretionary spends. However, despite this tough, challenging environment, we have been able to perform well in Q2. There has been all-round improvement in the performance witnessed in most of the business verticals from a top-line and bottom-line perspective. And our strong brand loyalty and large dealer network has been an advantage for Raymond. The demand slowdown was prominent in the cities, but with our presence in tier 3, 4, and 5 towns, they have been able to offset it partly. To some extent, the lower rupee did benefit us, though, we couldn't get the benefit of 68 rupees to $1 and all because we always do the hedging and all in time. So we have a better product mix, higher realization, and continued offtake in the combo packs and the makers, which improve textile performance and which could be seen in the all-round overall performance in Q2. Now, in the case of apparel, it's showing a sign of revival after a roller coaster ride for 6 quarters and has returned to profits, which could be largely attributed to consolidation in the last 1 year that we have been carrying out in supply chain logistics, manufacturing operations, and brand and sales structure. We did see consumer-facing channel, particularly secondary offtake, has been a good momentum. And the B2B segment is continuing to do well. And barring any macroeconomic changes, we continue to maintain our position that we are optimistic, a little cautiously going forward. And our FMCG segment is also doing well. So the PAT of 92 crores that we got in consolidated Q2, we hope to do reasonably well going forward.
Mr. Shivkumar, denim has been a significant contributor to your revenue chart. While revenues have been improving, what is the traction that you're seeing in terms of volumes and the outlook that you think you're going to clock come next quarter on realizations?
We have a capacity of about 35 million meters, and it's mostly B2B segment. In the denim segment, a large part of it is exports. More than 50% is exports. So the thing is, denim has been performing consistently in the last 2 years. To some extent, it is cyclical. In the last 3 years, we have seen that good trend. And the momentum is continuing, and we see the good performance continuing going forward as well. And as I said, our dollar has generally been between 59 to 62 is our average realization in that segment.
When will the proceeds from the Thane land bank monetization kick in for Raymond's?
See, just to put it in the right perspective, we have about 100 acres land in the Raymond books. And we have been evaluating all options, which include going through a joint development or bringing private equity partner, all self-development, and all the options are being evaluated. We did close out all the VRS payment that had to be paid to the workmen. It's about 110 crores, which was paid out on the 22nd of October. And going forward, depending upon how the opportunities come out, we will accordingly going for. The evaluation is very good, but it can always be better depending upon what kind of model that we want to adopt. So that examination is current reviews on as of now.
So what does the management essentially want? Because this land bank, the management is trying to monetize from last 5-7 years. In such a strong real estate market, why has Raymond failed to monetize that land bank?
It's not a correct statement to say for the last 5 years we are in the market. We had our plant in operations here, 7 million meters. We had to shift the entire manufacturing operations to Vapi, and we had so many workmen whom we have to settle all the accounts, which got done only on the 22nd of October, now 2013. So effectively, we are doing whatever is required to carry out to make the entire land contiguous to be able to go into the market. And the time has started only from now onwards. To say that we were always in the market is not a correct statement. We may be trying to inquire in terms of potential and all. That doesn't effectively mean that we were actually in the process of doing it and we have not done.
Okay, fair point. Mr. Shivkumar, just want to talk about the Thane land specifically, because we understand there is a deal to sell the 9.4 acres of 125 acres, and that is not culminated, and now you're planning to develop this yourself. What's the exact plan, purely for the, clarity for our viewers?
This entire land is about 140 acres, which include hospitals, schools, and some of those 9 acres. But the Raymond standalone books, this is 100-acre land. And we are contemplating to evaluate all the options that are available. So we may do master plan, creation and what is required to be carried out in this particular place. But as and when there are the right opportunities that come our way, then we will go in for all those options which are in the best interest of the company.
What is the value of this land, approximately?
Raymond standalone could be anywhere about 3,500 crores.
Okay. So if I try and read in between your lines, you are not close to a deal yet. So should we expect something in 2014? I'm giving you 1 year. Should we expect anything in next calendar year?
I cannot put a time period to any deal. It can happen even in 1 month's time, or it can take more than a year also. But the fact is, we will evaluate and execute the best options available for us.
Have you also applied for environmental clearances with the state government?
See, some of the processes and procedures that we have to carry out in order to make it totally, marketable and all that is required to be done, we are carrying out right now.
Okay, let's shift away from the land business and let's try and understand what is happening to the branded business. You are a market leader when it comes to the men's apparel business. Could you quantify more about the branded business?
See, there are two segments. One is the fabric segment, which is Raymond, and the other is the apparel segment, which has got 4 brands. We have got Park Avenue Parks, Raymond Premium Apparel, and the Color Plus. And in the apparel segment, we have consolidated our processes and all in the last 1 year, and it's now showing signs of revival. We have some way to go when we compare with competition, but the Raymond brand, we are the market leader, and textile continues to grow reasonably well. And we have about 900 outlets, retail shops, the Raymond shop, and also our exclusive brand outlets, wherein we are, channelizing all our efforts. And also we are going through the other multi-brand channel and the LFS channel, which is the lifestyle shopper stop and those kind of channels available. I would say in the apparel segment, we are right now on the path of runway and we'll be taking off soon.
Final question, if I look at your nearest competitor, I'm just using Arvind here. Arvind has forged into several global arrangements. They are selling on behalf of several global brands. Is Raymond also considering to evolve the retail business on similar lines where you're looking at global JVs, global tie-ups?
Not at this juncture. We are not looking at other brands to be propped up by Raymond. We will be propping up our own brands.
Okay. Mr. Shiv Kumar, appreciate your time, and I certainly hope to see more of you going forward. Before we take a break, let's go to Mitesh for some trading ideas. And Mitesh, there is no fall of buying. Even though yesterday we closed almost at the highest point of the day, it was a clean breakout. Markets went up on strong volumes. There was leadership, but there is no fall of buying on day 2.
I think you can say that for, the index per se. I think it's having a quiet time. But I think on individual stocks, I think there's a good fall of buying happening over here. I think very clearly, we have seen IT stocks see some kind of momentum today. Maybe, banking is quiet today, so IT is kind of perking up. I think also is the fact that, that individual stocks like cement as well as some of the Reliance Group stocks are doing well. So that's where we are focusing upon, because I don't foresee a big fall in the market. So stocks which are giving breakouts can still be good trading ideas. My belief is that, we'll continue to trade on the long side unless until we start getting below 6,300. So I've got buys on Reliance Communication around 141.5 mark with a stop at 138.75. Look for targets of 148. Reliance Industries itself is a buy with a stop at 872 for targets of 914. And I've got a buy on TCS, which was around 2030, 2035, but I think it's moved up slightly. But still can be held with a stop at 2009 for targets of 2100.
Okay, let's also tell you what the BNSN stock game participants have been up to on day 2 of the portfolio game show. Vikrant Jadeja buy calls in UPL, India Cements, Federal Bank, DLF. Vikas Sethi has retained Syntex and has buy calls in Exide. Prism Cement as well as Future Retail. And VN Giri has buy calls on Ramco Cement and the Andhra Bank, UPL as well as Sundaram Finance.
Presented by NSE, Investor Protection Fund Trust. In association with Berger Weathercoat All Guard. Reverse the effect of rain with silicone.
New driver. Today is his first day. Look ahead! Stop the car! Do you have a license or not?
License to I don't have, sir.
What? You never hire a driver without checking his license first. Similarly, while investing, make sure you deal with authorized people only, or your investments could run off track. Less on the road and more on the footpath.
So good, so much good. Invest.
Issued in the interest of investors by NSE.
Fine clothing, Lombard.
where real power rests.
कैंट प्योरीफायर्स पानी को बनाए 100% प्योर,
क्योंकि इसमें है डबल प्योरिफिकेशन आरओ और यूवी से।
कैंट देता है सबसे शुद्ध पानी।
Welcome back. 17